All right, welcome everyone. Here we are with the Asian projection video and how to use it. So first of all, in order to do these projections, I use my Fibonacci levels, and you can just open them and just copy, take a screenshot, pause the video, just copy my levels. And now I'll explain you why we use this, how they can be useful, and so on. But before continuing, I always need to say the same thing that you keep hearing in many of these videos, especially the ones with the Asian range and with the kill zones, which is that this stuff, if it's not used together with market structure and direction of the market, supply and demand levels, liquidity, and so on, and all this other stuff that you will find in this course, then this is not useful at all. You cannot just throw this Asian range indicator on your chart, use the projections, use this projection together with the kill zones, and you think that you can be profitable. No, I mean, you can definitely get some good trades because you saw that we can have some consistency by using these, but this is not enough to trade. So make sure to watch the other videos. Those other concepts are what we really need in order to trade, and then this is for better understanding and more accuracy in markets. So Asian range, you know what it is already. Kill zones, you know what they are and how to use them already. Projections, what are the projections, how to use them. Now the projections are these fib levels which just help us understand and project the Asian range. So basically what you do is you take your fibs with the projections. What you can do, by the way, is just right click template and you save it, so you can switch between your different fib levels really quickly. Our fibs for entries, the 0.5 Fibonacci. I use also the 0.5 with the background just in case it's more clear. And then you have the projections. Now, how to draw them? You just draw them from the high to the low of the Asian range. Now, which way though? Which way do you need to draw them? In this case, we have the projections to the upside. Of course, you can also draw them to the downside, so the opposite way. But it all comes down to where you are trading. If you are bullish, if you are bearish, if you're looking for buys, if you're looking for sells, where supply is, where demand is, and so on. Because what we basically need this for is that if the market is bearish overall, and then we start ranging, let's say this is the Asian range, and up here we have a supply, okay? What you're looking for is a manipulation, possibly during London or New York, of this range, well, during London mostly, to then continue. And guess what you have? You use the Asian range projections to see if they correspond to this level, okay? So this is basically what we use them for. Now, you will see some that they are pretty consistent. Here, in this case, this is an example for both buys and sells. So overall, please keep in mind that we are bearish, okay? But here we did have some setups for buys too, quick buys, small buys, breaker structure to the upside. Where is the demand that creates the breaker structure? Demand down here, okay, hard time from order block. I'll just show you the overall analysis just to make you understand. And then you have Asian range projections, perfect 1.5 projection, which is basically half of the Asian range projected here. We perfectly touch it and then go to the upside. Then keep in mind we are overall bearish in the market. We already mitigated this supply right here. We already broke to the downside here. Okay, we already had the breaker structure to the downside. Where is the supply that creates the breaker structure? It's this whole big ass candle, but up here we inside the week we probably have a 5 minutes. Well, let's just check it. 5 minutes. Oh, not 3 minutes. Not even. And I'll use this candle, the last red candle before the drop. Let's see, 1 minute. This is kind of weird. This is very big. Let's see if we can refine it. Okay, it's this whole candle to the upside, last up candle before the down move. So that's our supply. And let's go back to the 15 minutes just to show you the projections. Okay. And then, so since we are overall bearish and so on and so on, so keep in mind you always need to do your analysis, liquidity analysis, supply and demand areas, unmitigated and mitigated, market structure, okay, all of these things. With your Asian range projection, and here we can see that we correspond to our 2 Asian range projection. Of course, we weak above it, we almost reached the 2.5, but I would say that overall we respect the 2 level. Now, when you're looking to trade these projections, what I usually like to see is just a projection that corresponds to a grab of liquidity, so grab of liquidity of the Asian range or of, you know, equal highs or whatever, and that is reaching a supply or demand level. So a projection that is inside a key area that we want to trade. So projections come last, okay? They are the last thing we will look for, not the first. Now here, of course, we have a good example, but market is overall bearish, so I wouldn't look for these buys. Just to make you understand the Asian range, I'll put it into perspective here. We just reached the 2 level, okay? So it's just one projection of the Asian range, but we will not look for this trade because overall we're bearish. I'm just showing you. Here, nothing, we don't really have a manipulation to the upside to then drop, and we are bearish, so I didn't put it. Here, another good example, okay? Overall, we're bearish. Here, Asian range, manipulation of the Asian range, 1.5 projection, and then we drop. Here, perfect. Here, we have the Asian range, manipulation to the upside, and continuation to the downside. But as you can see, this manipulation to the upside doesn't reach, and this is why I put this, doesn't reach the 1.5 level. And this is just to say that, as I say on every single video, trading is not 100%, it's not a science, and you will not see the same thing every single time. So maybe in this case, you will feel like you missed a trade. But now, why did you miss a trade? Here we had supply, let's see, and we didn't reach it. So for me, it's just not a trade. This doesn't meet my plan. I will not enter this trade at all, right? Because we didn't even reach the zone. And plus, if I was going to trade this, then I would probably look for the 1.5 projection. Here, nothing, since we didn't really manipulate and we were bearish overall. So I was looking for a move to the upside to then continue. So I didn't mark it out. Here, perfect. 1.5 projection, we touch it, continue to the downside. As you can see, always London, London close on. Here, why did I mark this? Because this goes for both buys and sells. What would I look for overall? I will look for buys because we are in an uptrend overall. No matter that later we reverse and continue to the downside, but overall here we are bullish. Here we have our demand area. Here we have our Asian range. We put the projections. Okay, what do we reach? The 2 projection, and then we continue to the upside. So this could be a buy trade, and of course here we need to look for confirmation. But at the same time, if we really wanted to trade the London close zone, which is not something I would recommend to go against the trend, so it's not something I will recommend at all. We have the opposite projection, and I think we reached the 1.5. We do reach the 1.5 perfectly, and then we drop. So as you can see, we went both ways. Here, Asian range, overall, we are bullish, okay? We have the Asian range is manipulated during London, so London manipulation. Down here we have demand area, which corresponds to the 1.5 projection. What happens? We don't reach it. So this is a missed trade, okay? But again, you see how it all lines up. Down here, I didn't put it since we were overall bearish and we didn't have a manipulation to then continue. We just went to the upside and didn't respect anything. Probably here never had bearish confirmations. Here we are overall bearish. As you can see, these lines up perfectly. supply, okay, supply above the Asian range, London manipulation reaches supply, reaches the 1.5 projection, then we drop. Perfect trade, okay. See if we have some more. Here, for example, we didn't have the manipulation, so I didn't mark the area, the projections. Here again, the reason why I'm not marking some of them is because they're either too big, so this is too big and I'm not going to consider this, or because there is just no confirmation. For example, here there is no manipulation to the upside. I will never look for buys, so I will never draw them this way, okay, because some of you might do that. They might say, oh, okay, down here there is demand corresponds to, and I think I need to talk about this because I know some people will do it. Down here we have demand corresponds to the 2 projection, and I will look for buys. I will enter buys, and then you hit the stop loss. Why? Where is the market going? Here, it's going to the downside, all right? Break of structure to the downside. We are bearish, okay? We are expecting a pullback into what? Pullback into a premium area. Here we do reach the premium area, and then we continue to the downside. So why would you look for buys down here? It doesn't make sense. And I didn't put my projections to the upside just because here we didn't have the London manipulation to then continue. If we did, then this would be just perfect. Let me put the projections. Perfect to the upside. Where would I look to trade from? Probably from here. Okay, perfect. So just to explain why some are marked and some are not. Same here. This would be a perfect, London manipulation at Asian range projections, but I didn't even mark it out. Why? It's perfect to the 2 projection. Why didn't I mark it out? Because we are bearish. Here we broke structure to the downside. We reached supply, rejected. We were going to the downside. I will never look for buys from here, even if then we went bullish, but we're not trying to predict random stuff. We want to trade our plan, and our plan wants to go with the trend. And this will be, from here, we would expect a new lower low. So this is will totally be against the trend. Well, anyway. Here we're trending too much. It's not an Asian range that I'm interested in. Here, Asian range. Where is the direction of the market? Market is overall bearish. Asian range, manipulation to the upside, 1.5 almost, and then continuation to the downside. If you don't get this entry, we create a new lower low, we retrace to supply another entry, okay? Just to make it understand. I believe these concepts will help a lot of people. Actually, I'm really happy that I'm sharing with you finally this stuff. Here we can mark it out. We just didn't go enough to the upside. Here saying we are bullish overall, so I wouldn't consider this manipulation. This is just a take-off direction to continue. We are bullish. Did I have some other examples, or are we done? Because otherwise, yeah, we're done. ADUSD. So AUD/USD, let's see what's going on. Perfect. AUD/USD is overall bearish, right? Well, if I zoom out, you can see what I'm talking about. It is overall bearish, yeah. Okay, so perfect. Here, Asian range is too big. We will not consider this. Here we have Asian range. This is actually today. Projections, we reach the 1.5. We wick above it, but overall you can see the 1.5 is respected. We don't even close above it. And unfortunately, there was no supply that corresponded to this level, so I was not going to trade it. It doesn't meet my plan, but I would have looked at this area overall. Sells from here, 2.5 projection. We reached this area to continue. Well, that didn't happen, but as you can see, projection was still respected from here. But it's not a trade that I would be interested in. here too big, okay, when we're trending this much, just too big. Here nothing happens, we just range. Here, perfect. Where are we? We are bearish. Overall market is bearish. We use this high as liquidity, also because this high didn't really break structure. This broke structure. This high didn't break structure. So this high is liquidity. Up here, we will have supply. Again, we didn't reach it. I will look for a trade from this level. But anyway, you can see that the Asian range projection from here was respected. It just doesn't meet my plan, because my plan is to trade from supply and demand levels. Too big, this one too big, okay. Now here, Asian range projection, perfect. Where is the direction of the market? Breaker structure to the downside, supply level. Why do I take this week too? Because a supply level or demand level, well, a supply is the last up move before the down move, and a demand is vice versa, the last down move before the up move. And this week is basically an up move before the down move, so that's included in the supply. Anyway, supply, direction of the market to the downside. This is a break structure. 1.5 Asian range projection, perfect entry, continuation to the downside. This is an intraday trade. As you can see, you close it by the end of New York. And then just since we talk about everything, I'm including also other stuff in this lesson. Then what do we have during London close? London close pullback. But anyway, where can you have your target? Just use this low as liquidity. Okay, liquidity low. Because what does the Asian range have? As I said in the first lesson, it has liquidity above and below it. So we get an entry above it because of the direction of the market, of the order block, of the projection. What do we target? The other side of liquidity that the Asian range has. So the lower side, we just touch it, grab liquidity, and then what happens? We come back, which corresponds to London close, kill zone. So it all comes together. It all makes sense. Where's the direction of the market? To the downside, break structure. Where's the supply that created the break structure? Supply. Asian range projection. 1.5. We had a trade. In this case, we don't hit take profit, but by the time we are down here, you are break even already, and then we hit your break even. But as you can see, it lines up. Asian range, where's the direction of the market? Is bearish, order block, last up move before the down move. Refined is just this candle. This is the overall order block that you could find on the 1 hour or 4 hours. We don't reach it anyway, but let's see if we reach the week. No, we don't. Doesn't look like we do. Anyway, 1.5 Asian range projection here. Asian range projection in this. Oh, the reason why I marked this out is because some days can just help you identify the high of the day. So in this case, we reached the 2 level, but it's already the end of the day. You can just, if you're trading the London close, you can just still use the Asian range projection to say, okay, we are in the London close. I will trade against the trend, so I know that it's risky. Remember that always. I know that it's risky because it is against the trend, but we are at Asian range projection. We are inside the London close kill zone, and maybe we have a confirmation for a reversal. Yes, here we break the previous low. Okay, and then we can get some entries. I wouldn't take this trade, but I'm just doing the example. Asian range projection. Again, I wouldn't take this trade because it is against the overall trend, but just to show one London manipulation, 1.5 projection, and then we continue to the upside. Let's see if we have some other examples. Asian range projection. This is just perfect. Overall direction to the downside. Breaks of structure. Where supply, which breaks again the previous structure. So we go to the upside, break structure here, supply, Asian range projection, 1.5 Asian range projection. Here we just touch it and drop. Okay, so I think that of course doesn't happen every day. Sometimes it's not respected, but I think that just by looking at this video, you can understand that it can really give you some consistency, some more accuracy, and it can really be helpful. Now, as everything else that you will see in this course, you need to apply these concepts, backtest them, not to understand if they work, because they do work. I'm using them, they do work. I can guarantee that they do work. Just to get your eyes trained to see these things, because I can see them more quickly just because I've been trading for a long time. But you need to get used to seeing certain things. You need to get your eyes trained. So that's really important. Go on your charts, backtest these concepts. Right here, I'm just showing you when I say backtest, actually go and replay and backtest these concepts. You're here, you see, okay, we're bearish. I have the supply, here is the Asian range. I have my projection, where do I want to enter? Well, probably at the 1.5 projection. I go, let's see what happens. 1.5 projection, we reach it. Okay, we reach it. Then I go on lower time frames for confirmation. Let's see what happens. Lower time frames for confirmation, we are still overall bullish. Now we break the previous demand, but maybe I want to see this demand to fail in order to be sure. Let's see if that happens or if we hold it. Initially we hold it, we keep going to the upside, we have another break of structure. So now I don't need to see this low being broken, but I need to see this low being broken, or actually this one, because we just broke structure again with this move. So I need to see this low being broken. Let's see if that happens. That happens right here. You can either enter the trade right away, but it's a little bit less accurate. Or what do? We start waiting for a retracement. Okay, retracement is happening. What do we put? 0.5 premium and discounted. And here you have supply. Sometimes we reach supply. Actually, I would take the last small candle before the big move. So I will just enter the 0.5, short position, sell limit, stop loss above this level, 6 pip stop loss, okay, target below the Asian range. Here we need to readapt what's going on. So readapt also my entry, I'll probably put it. Now I'll still leave it there because we have liquidity high and so on. Let's see what happens. Perfect. Entry. All right, this can be way a bigger target. I'm just targeting the Asian range low, but it can be way bigger. Let's see a possible target. I didn't even look. Possible target can be just below all the lows because we are targeting a new lower low. So below these lows, okay? Then 1 pip below them or just before them, okay? This is almost a 1 to 4. We can have bigger restored ratios, yes, for sure. But still, I would say this is good. How can we have bigger restored ratios? That when we reach our entry area that we were thinking about here, we look for the same thing that we were looking on the 5 minutes, but we dropped to the 1 minute. So what happens? We're still bullish, still bullish, still bullish. What area do we need to break? We need to break this area. Well, this is going to be the video about the entry types, but since we're here, I'm just showing you live examples. This area, push to the upside. This area is broken. What do? Premium and discount. Let me just put with the background, premium and discount. Now with the background, we cannot see anything. Here we go, premium and discount. Can we get the preferred entry from this? Let me delete the previous entry. Well, actually, let me delete the previous entry. Can we get the preferred entry from this supply? We can. Can we get still a good entry, but not that accurate? Of course we can. We just enter at the 0.5. Stop loss above this, 3.5, 3.3, just above the previous high. We have confirmation that we are reversing. same take profit, and this becomes a totally different risk to reward ratio. This becomes a 1 to 7, almost 1 to 6.7. Anyway, just a quick explanation for the entries, but as you can see, we basically looked for the same exact things here on the 5 minutes, here on the 1 minute after we had confirmation that the 5 minutes was playing out, okay? So this is how we combine Asian range, direction of the market, supply and demand levels, projections, and entry types. Thank you for watching this video. I didn't prepare this type of entry. I just saw that it was going on. I did the replay, and this is what we look for in the market over and over. We will get some losses. Yes, we will. But with this type of risk reward ratios, 1 to 4, 1 to 7, we can get also bigger risk reward ratios. Then we will be fine. Thank you so much, and I'll see you in the next video.